Look, crypto wealth will be a big part of the world. Crypto culture will be a bigger part of the world. Crypto will be the underpinning of how banks work. And I think that's a material shift as well. There'll be more lending, there will be more collateralized borrowing, there'll be more complex strategies available to all investors. I think that will have pros and cons as well, but that's the direction of travel that we're going if crypto succeeds in the next couple of years.
One of Hougan's most important observations is that crypto is pushing the world toward a 24/7, 365 financial system. In traditional finance, markets close, stocks stop trading, liquidity disappears over weekends, and in many ways that's comforting. It gives investors time to breathe and prevents panic reactions during off-hours geopolitical events. Crypto removes that pause button. In a crypto-enabled world, markets never sleep. Transactions settle instantly. Capital moves across borders in minutes instead of days. Costs fall dramatically. From a practical perspective, this is a massive improvement in efficiency. It's like the transition from physical mail to email. Communication became faster, cheaper, and global overnight. Before we go on, just a quick reminder, liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
I think it will be better in many ways from a practical perspective. So transactions will be cheaper, faster, easier. The world will be more 24/7. I think we'll get to a world where most financial markets are operating 24/7, 365. For what it's worth, there are up and downsides to that. It's nice that the stock market closes and we can go about our weekends without worrying about it. It's nice that if there's a big geopolitical event on Friday at 8, you don't have an illiquid market reacting to it. When the world's 24/7, that won't be true. We know in crypto that can create sell-offs and liquidation cascades and the crypto equivalent of like circuit breakers. You're going to see that spill into other markets. So the world will be more connected, cheaper, faster, better, and there will be downsides. Maybe an analogy is when we went from writing letters to sending emails. The world got better in lots of ways, but there were downsides. The other thing that I think will change is look, crypto wealth will be a big part of the world. Crypto culture will be a bigger part of the world. Crypto will be the underpinning of how banks work. And I think that's a material shift as well. There'll be more lending, there will be more collateralized borrowing, there'll be more complex strategies available to all investors. I think that will have pros and cons as well, but that's the direction of travel that we're going if crypto succeeds in the next couple of years. I think there's still some nuance there. Yeah, so crypto historically has moved in this 4-year cycle. It's 3 up years and a pullback year. The pullback years were 2014, 2018, 2022. The reason that people are talking about it is we can all do math, and the next 4-year would be 2026, which is this year. But I think we're going to end this year up, and there are many reasons for that. The ones I like to point to most is you have to think about what drove the 4-year cycle. Historically. It didn't happen by circumstance. There have to be factors. And the 3 factors that I think contributed were the Bitcoin halving, which happens every 4 years, interest rates, which went way up in 2018 and way up in 2022, and then blowups, right? We had a big boom in 2021. It got frothy, and then we had excess and the blowup of FTX. We had a big boom in 2017. Market got frothy. And we had these meaningless ICOs that ended up being worth 0 and the SEC cracked down on them. When we look at the market today, those forces are very weak compared to previous 4-year cycles. The halving is just not that important anymore. By definition, it gets half as important every 4 years. So you're not talking about that much Bitcoin that changes between halvings anymore. So I don't think that's a big driver. Interest rates, I mean, you tell me, but the market thinks are more likely to go down than up. We're certainly not set up for a repeat of 2022 or a repeat of 2018 where rates went up multiple percentage points. Probably they're going down. So it's working in the reverse direction. And then we didn't have the ebullient bull market in 2025 that we had in 2021 or in 2017. So we don't have the excess, and therefore I don't think we have the blow up risk that we had. So those forces, I just don't see why they would repeat. And on the other side, we have regulatory progress, we have institutional adoption, we have wirehouses approving Bitcoin ETFs, We have, tens of billions of dollars of flows. Those seem like the important factors right now. And I just don't think on a fundamental basis, there is a reason to believe this 4-year cycle repeats. I could eat my words. If we're down 60% this year, I will have been wrong. I think it's more likely we're up 60% this year. And the 4-year cycle is something that we talk about as a historical anomaly within crypto. We had a lot about the outlook for Bitcoin and crypto. And just to summarize it, one of our predictions was Bitcoin will break the 4-year cycle and set new all-time highs this year. I think we just covered that. A related one is that we think Bitcoin will be less volatile than Nvidia in 2026. And that's sort of a gimme for us because it was approximately as volatile as Nvidia last year. So it sounds like an outrageous claim, this hugely volatile thing, Bitcoin, less volatile than the world's largest stock. But in practice, it's sort of already here. And the point we were making with that prediction is not to give us an easy win in the scoring system, but rather that people's perception of Bitcoin is it's still extremely volatile. And as you and I just discussed, I think that a lot of that volatility has been squeezed out. So that was an important one. We said ETH and Solana would also hit new all-time highs if the Clarity Act passes. So that's a conditional prediction. But I do think the Clarity Act, which doesn't impact Bitcoin that much, because Bitcoin is in the regulatory clear, it's doing its own thing. It really impacts this DeFi stablecoin tokenization world. That's where it sits. And ETH and Solana are the primary beneficiaries of that. We can get a positive statement on the regulatory front. I think they go to new all-time highs. If we don't, we're not saying they're going to go down. So that's the inverse of our prediction is not true. We're just saying we're not certain what will happen. It will be dependent on how crypto executes in an era of regulatory uncertainty. So if we get it, new all-time highs for those assets.
Perhaps the biggest structural change Hougan identifies is the collapse of the wall between Wall Street and crypto. Not long ago, major banks openly rejected crypto. Jamie Dimon famously threatened to fire employees for touching Bitcoin. Today, those same institutions are offering crypto-backed loans and exploring tokenized assets. This convergence is one-directional and irreversible. Once traditional finance embraces crypto infrastructure, the two systems become permanently intertwined.
There's been a removal of the wall between Wall Street and crypto. That's been one of the big changes, right? It used to be that Wall Street really didn't want to touch crypto, right? Jamie Dimon would go on and say he'd fire anyone who would own Bitcoin. Now they're offering, crypto-based loans and exploring tokenization, et cetera. So there's been this blending of Wall Street and crypto, which I think is only a one-way street. That's only going to get tighter and more locked together. And then the other thing from an investment perspective, from my framing, the biggest thing that's happened is that investors have removed from their mind the far left tail of outcomes for crypto. I think to say a bit more about that, I think one of the things that kept most institutional and professional investors from allocating is that they couldn't write off the possibility that the whole thing would go to zero, right? Poof, it goes to zero. And I think the biggest change that's happened over the last year from an investment perspective is they've clipped that tail. They've said to themselves, yeah, this could go down. Bitcoin certainly can go down. ETH and Solana certainly could go down. Stable coins maybe won't reach $3 trillion in 3 years like Scott Bessent says they will. But it's not going away, right? That is the standard set of words that even Jamie Dimon says about crypto. It's not going away. And when you remove that outcome of negative 100, it becomes a much more attractive investment and an investment that you won't get fired for making. And that's why I think you're seeing all these flows. So those are the two big changes, Wall Street and crypto colliding and people deciding crypto is not going away. And therefore, it's much more attractive from an investment perspective in a portfolio and from an investment perspective in terms of building infrastructure, et cetera. So to hit digital asset treasuries, I think you have to fragment that risk into two sides. The first is, will they buy as much crypto as they bought in 2025? And I think the answer there is no. So if you're hoping for them to continue to be big buyers, I think you'll probably be disappointed. I think there'll be marginal buyers on the edges. and then some of them will use option overlays to sell upside. So they won't be a big positive force. The flip side of that is, will they be forced to sell their Bitcoin? Will MicroStrategy dump, 500,000 Bitcoin? And the answer there is just plainly no. Most of the DATs that hold crypto are the large ones, BitMine, MicroStrategy, etc. And these folks, just from a detailed perspective, are in a very strong financial position. Right? MicroStrategy has $2 billion of cash and $800 million of interest commitments. $2 billion is more than $800 million. So why would it sell Bitcoin? There's just like no forcing function. So I think DATs are maybe closer to a neutral than a risk or a benefit to the market. On the quantum side, my core view is that the quantum risk is still years out. It's good that we're talking about it, good that we're focused on it. The closest analogy is something like the Y2K bug, which is to say this is a known future risk that can be mitigated through action. If we don't mitigate it, it will materialize as a significant risk. But if we do mitigate it and do the hard work, I think it can be dealt with. And because it's known, I think it will be dealt with. And so I don't worry about it as an existential risk, but I don't write it off because it is a very real risk that has to be dealt with, and there are complex, challenging questions there. It's just because it's so well identified, because we're talking about it, it's de-risked in my mind. So that's my core view on it. Yeah, I mean, the biggest one by far was the launch of Bitcoin ETFs. That was the one that really put this into the mainstream, because before Bitcoin ETFs, it was challenging to allocate, right? Either you had to do it through a vehicle like GBTC, which was a traded trust that traded at premiums or discounts. Bitwise had its own vehicle like that in an index structure, but that's imperfect, right? You don't necessarily want to buy at a premium. What if the premium goes to a discount? It adds additional risk. Or you had to do it through private funds, which had a lot of paperwork. And there was a lot of perceived regulatory risk because the SEC hadn't approved a Bitcoin ETF. So once we got a Bitcoin ETF that you could buy in your Schwab account, just like you might buy SPY or AGG, right, big stock and bond ETFs, then it became much easier for these advisors to do that. And the regulatory cover of having an approved ETF, which sort of gave some degree of blessing of this space, really was a major inflection point in the market. But we've seen those inflection points, we've seen them before. Certainly every time a major high profile investor made an allocation, that helped us as well. I remember when Paul Tudor Jones became the first major hedge fund to allocate to Bitcoin. That resonated with a lot of people. If Paul Tudor Jones thinks this is a good idea, maybe I should reconsider it. That was a catalyst moment. And then anytime there's a sort of blow up and concern about fiat currency, about debasement, about money printing, certainly the money printing that went on post-COVID woke a lot of people up to the need for alternative exposures like Bitcoin, and that was another inflection point. So yeah, periodic growth, but we're in the big one now with the approval of ETFs. Clarity is the core piece of crypto market structure regulation, how crypto should be regulated between the CFTC and the SEC. It includes, at this point, a lot of details around things like, can stablecoins pay yield? Can we have tokenized equities? Can DeFi work? But you should think of it as the big bill governing how crypto is regulated. The reason it's important, and then I'll get to where we are, the reason it's important is one of the reasons crypto is doing so well is we're in a pro-crypto regulatory environment. We have a very pro-crypto head of the SEC. We have a very pro-crypto administration. We have a very pro-crypto head of the CFTC and the OCC and other agencies. And that's made it more comfortable for entrepreneurs to build in this space. But those can change if there's a change in administration, right? Regulatory changes can change. We saw a big change when we went from Gensler to Atkins, the previous SEC chair, to the current chair. There's no guarantee we won't go from Atkins to someone who's more hostile to crypto. So the reason the Clarity Act is important is it would create a firm, concrete foundation that we could build the future of crypto on. There was hopes it would pass last year. It didn't. It didn't because the bill at that time angered Democrats who wanted more protections against sort of political earning of money through the crypto world. And because crypto didn't like many of the DeFi progressions, we then got this new markup yesterday through the Senate, a new proposed bill that tried to find a middle ground. And I was feeling optimistic. But recently, Brian Armstrong, the CEO of Coinbase, came out and said it was worse than the status quo and that there were unworkable things.
Finally, Hougan identifies the launch of Bitcoin ETFs as the single biggest catalyst in crypto history. Before ETFs, exposure was awkward, risky, and inefficient. After ETFs, Bitcoin became as easy to buy as a stock or bond fund. Regulatory approval provided legitimacy, liquidity, and psychological comfort. This wasn't just another milestone. It was the moment crypto became mainstream finance.